Let's talk to Craig Erlam. He's Senior Market Analyst at OANDA. Morning to you, Craig.
Good morning.
We're going to do currencies this morning. We've got three currency pairs to go through. Let's kick off with the US dollar against the CAD, known as the loonie. What are you thinking?
I'm thinking that the Canadian dollar's still looking strong. We've had a very good run earlier on last year, and we had a bit of a correction. That's very normal for the markets. It was a very good technical setup. We had the peak around the 50 fib there and around the moving averages. We came back to that first kind of projection level based on the size of the chart peak. And the neckline which comes below it, which you can see around 126.65. And then we've had a bit of consolidation again, but you can see that momentum is very much with the sellers still, because every time you see a rally, it gets sold off at lower levels, and that's always a big warning sign that that the bears, as you call them, are still in control of this move.
Yep.
It's always seemed likely or strongly possible that we'll see a move below this, and the setup that we're seeing right now really does support it. So I think the 122s, 121s, even 120s is very feasible here.
Okay, understood. Let's move on to cable, the Great British Pound against the US dollar. We're around a big key level, 140.
And we've broken above it. So I mean, I think it's a big move in this particular pair. You'll notice that we haven't traded here since pre-Brexit. So obviously there's going to be people celebrating right now. June 24th, I think it was, when we saw this very big sell-off here.
Yeah.
We're trading back around those levels again. Actually, pre-Brexit lows around here. This is at times when people were worried about the potential of Brexit. We're now trading above those levels.
But we've had a number of people come in and say this 140 area will be protected for options. We've got some barriers, we've got resistance, we've got a round number. The buyers must be absolutely aggressively buying this market, right?
I think so. I think the buyers are buying the pound, and we'll see in the next chart that that's the case as well. But they're also selling the dollar, and I think what we can't misunderstand here is that this pound dollar makes the pound look very strong, but if you put the pound against other pairs, then it's still very much not recovered from the post-Brexit lows. But in this case, it very much has. If we can continue momentum above here, then I don't see any reason why we can't be looking at 145, 146 at some stage, and then maybe not too distant future, maybe not in the next days or weeks, but over the next few months, I think that's a very real possibility. What you want to be cautious of is these kind of false breakouts.
Yep.
People who are fading the move, and then you so over the next few days, I think it'll become much more clear.
But
what
okay,
kind
let's
of
say
move we're looking
140 is a big level for whatever reason. Okay, break to the upside. So what do we want? 2 days above that level? Would you want to test a pullback to hold and then rally off that point?
It always depends on how cautious a trade you are. I think one daily close above is a good signal. 2 or 3 days above is a very strong signal. If we close at the end of the week on Friday, then that's again another third very, very good signal. Usually these fading moves, these false breakouts, within a day, within 2 days, you will see that become very apparent, and we'll be back below 140 again. At the moment, that's not looking like we've got to 140.75 here. This looks quite good.
Okay, let's wrap up with the Great British Pound against the yen. How's the pound doing here?
Yeah, very good. The corresponding move above 140 has seen us go through 154 here. Now this is long-term resistance, so from a technical standpoint, that's very good. Once again, you're looking well back for resistance levels. I tried to find a chart that showed that, but really it would have condensed everything up so much you can't really look at these past levels without zooming in. Again, technically very nice. If you're an Ichimoku cloud trader, it looks far more complicated than it is. It's very simple. If you're above the cloud, it's bullish. If you're below, it's bearish.
But they only work in trending markets, right, the Ichimoku?
They only work in trending markets, or they work best in trending markets. And here you can see we've tested the Ichimoku cloud 3 or 4 times over the course of this recent few months. The moving averages have come into play very strongly as well, and we've rebounded higher. Now that we've gone to new highs, this starts to look very bullish. Again, as with the pound, if we can hold above here and this isn't a false breakout, then something like 160, and again in the not too distant future, looks very feasible.
Great, thank you very much, Sinead.
Thank you.